Take a look at this, guys. Now, one thing I've talked about, and I'll throw it to you in a second, Ben, is that we've talked about how this channel was insanely hard to break out of. And again, a lot of people don't understand why it's such big resistance. And I want to just show you here, folks. If you go back to the beginning of the bull market, right? So we were already trading up here, and we had this big move to about the 42,000 level, and we retraced right there, and it stalled, and then it rallied to 65,000. Then we came down 3 full times, 1, 2, 3, and we rallied to 69,000. And then we kind of came down, eventually consolidating right here and breaking down. And that's why this level is such a major technical resistance, because that was the buyer level back then. That was where everyone bought. So once we broke, it's now where everyone that bought in here is actually selling, right? They're like, oh my goodness, I got back to break even. I'm going to unload. In addition, it also has the aspect of being a technical level that I see. And so I've shorted multiple times into this level, as I'm sure many, many hundreds, if not thousands of other technical traders have. So here we are breaking down, trading right around 29,000. And you could see how we kept on getting rejected. Even with closing above, you had a reversal candle. This is a topping tail. So topping tails are powerful. This was a green candle. This is called a reversal candle in technical analysis. And then we were hugging this lower level and finally the break point. So I wouldn't say that we're definitely heading straight down, but I think Ben and I would both agree that there's probably some weakness in Bitcoin coming in. We were just talking about it on the Spaces, Ben.
Hello, and welcome to Money Talks. In today's video, Gareth Soloway gives us an update on his current macro thesis and his perspective on current global market conditions, also his prediction for Bitcoin and crypto, and where he thinks the market will go in the next months. So let's get started with the video.
Just in terms of the market coming down and potentially making a lower low down here, to me, it's honestly, I've become more convinced that that's going to happen based on what's been happening in the stock market relative to Bitcoin. And I think you put it perfectly, is that altcoin money has really been what's been propping Bitcoin up, right? Bitcoin alts are going lower. Bitcoin has been the recipient of a lot of that money, and it's been grinding higher. You haven't really seen the NASDAQ's been making insane moves to the upside. NVIDIA stock, I mean, take a look at this chart on NVIDIA here. This incredible move, right? We made huge new all-time highs on NVIDIA. Now, granted, it was the AI story, but it was drawing liquidity away. But there was no recipient. You didn't see Bitcoin breaking out when NVIDIA had this move to the upside. So that's a concern. And the concern becomes that if the stock market, let's just say we pull back to this gap fill on a technical basis, this is probably where we're headed back to on NVIDIA. So if we drop, that would be about 30% on NVIDIA. Where is Bitcoin at that point? Where is the altcoin market? And I would be scared to think about where the altcoin market is at that point. So I do think that if the stock market is to drop 10, 15, 20% from where it is, it's hard to believe that Bitcoin, if Bitcoin fell, so let's do this and think about this, right? So Bitcoin was at 69 and the stock market was at all-time highs. Bitcoin dropped to 15.7, then bounced 100%. The NASDAQ has rallied massively, right? And so if we fall, let's just say we fall back to these October lows on the NASDAQ, to me, why wouldn't Bitcoin be below 15.7 when it only has to drop about $13,000, $14,000 versus dropping from 69 to 15 the last time we dipped down to these lows? Does that make sense? One of the couple things that I want to just bring up is number one is that the .com situation is what I've talked about for the last year plus 2 years, in that you have all these crappy, I mean, living through and trading through the .coms, there was pet.com, there was, I make you a dinner.com. I mean, like every crappy idea was thrown out there and they attached a .com to it and it got a ridiculous valuation. People would buy it. I mean, it could literally be like, hey, here's my dog's turd.com, and people were like, oh, $100 million valuation just like that. And the idea here is, if you look at the comparisons of what we've seen in the crypto markets with these shit coins and these meme coins, it's so eerily similar. And what we know from the .coms is that you had to have a washout where, I mean, think about how many .coms, when you came in 2001, 2002, out of that period, how many .coms were really left at that point? I mean, at least the name brand there was maybe 10, maybe 15, maybe 20. Well, very similar. You would probably expect the same thing with the altcoins, right? So there will be some that survive. I think you'd agree with that, Ben, but it will be way less than you have out there. And by the way, if you look at the NFT market right now, I mean, talk about a market that hasn't even bounced yet. I mean, that hasn't even had a slight bounce.
Bitcoin threatened fresh downside over the weekend as markets geared up for the July 23 candle close. July 22 saw a brief dip to $29,640 before a recovery in time for the daily close, but traders remain worried that worse was to come. So we have a double top rejection currently on BTC, so we need to really make a note of levels in case we drop. Popular trader Crypto Tony warned Twitter followers in a fresh analysis of the 3-day chart. Those two levels are $25,000 and $20,000, and these are both key psychological levels. Make a note. Fellow trader and analyst Nebraskan Gunnar admitted that downward BTC price action seems likely, noting that BTC/USD had sunk below the narrow range in play for the past month. Others were ready and waiting for volatility to re-enter the market, but would not be drawn on whether Bitcoin would ultimately break out or break down to test levels from earlier in the year. Among them were a popular trader and analyst Tony Guinea, who envisaged a make-or-break decision for the recent narrow price range in the coming week. I'm expecting a big move with $BTC next week. 31.32 is resistance. 29 is support. Keep it simple, he summarized.
Yeah, absolutely. And I think it's important to just take a look at this chart too, which is Fed balance sheet, right? So you had the pop in the Fed balance sheet when the financial crisis, the banks crisis. But if you look here, right, we're now making new lows. And so I think you talked about it. We've talked about it almost in every no-show zone for the last maybe 3 or 4 weeks. But there's the jaws opening up, right, where you have less and less liquidity in the system, but the stock market has continued higher. And the reason that impacts crypto is because it's all liquidity, right? It doesn't matter if it's a stock, if it's a commodity, or if it's a crypto. It all has to do with how much money is in the system. How much money do people have to actually buy things with? I think we've seen the economic data again in the past week. Since our last stream, we saw other economic data. I think productivity might have been one that was down, that missed expectations. There's been a bunch. We got some European data out, I think in the last 24 hours that was just horrendous. So at some point, the labor market will crack, but I think that's been, if you look at a dam and that's the one thing plugging the dam from breaking and flooding the whole scenario here. So I think it's super interesting. And I do want to mention, and Ben, I feel like this is something we almost have to have at the bottom of our screen when we do these, is that we're both very bullish longer term, but we just try to keep it real, right? I'm not going to come on here, and Ben's not going to come on here and be like, hey guys, to the moon with Bitcoin and everything like that. We want to make sure that people get on the right side of the trade, or at least have a good indication about the likely probability of a move. And that's really what it is. So we are both bullish longer term, especially on Bitcoin, but we want you guys to at least be understanding of what the data is showing us.
This week should provide plenty of potential volatility indicators as markets digest macroeconomic policy cues. The United States Federal Reserve's Federal Open Market Committee, FOMC, will meet to decide on interest rates ahead of the Bitcoin monthly close. As Cointelegraph reported, sentiment is almost unanimous in predicting a return to rate hikes this month following a previous pause. According to CME Group's FedWatch tool, those odds stood at 99.2% as of July 23. So what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.